Good morning, everyone, and welcome to the weekend update. I'm going to try and keep this video pretty short this week. And really the reason is because we don't know what's going to happen. It's a day-by-day basis right now. We're just hoping that we will finally see some kind of momentum move into stocks. Right now, it's just whatever the algos pick for the day, and everyone piles in. We're not really seeing any peer momentum, sector momentum. We have a bunch of cheap stocks out there. It's just a frustrating waiting game, as I know. I know some of you guys, we've been waiting for weeks and months, and that sometimes is how it is. This is a market that doesn't know what it wants to do. And what the big driver, of course, is we're looking right here, U.S. Treasuries, depending on what the Fed is. And given the jobs report on Friday, the Fed is absolutely raising rates in March. If they don't, the market's probably going to sell off no matter what, saying that they're missing what's going on. This is a chart we looked at before, and it highlighted the move in the 10-year treasuries that we saw last year that really crimped the market, or started crimping the market and putting most stocks into their bear market. And that is when essentially we had bond yields double over the course of 3 months. Right now, we're going on 2 to 3 months and we're up 50%. So what does that mean? I had an inkling that we would probably see rates top out around 2%. We probably or could see them creep up to 2.25, maybe 2.5 on the extreme. But I think we're getting closer to the top for now than we are towards it continuing. So I think that could start to be reflected in stocks when they go, okay, now we know what the picture is. Let's start buying stocks again. So that is the scenario, the hopeful scenario I am looking for near term. The other big driver right now is oil prices, which are through the roof. A lot of reasons. Russia, Ukraine, a big part of it, but the production cuts, etc., etc., etc. Oil is overbought, but as we know, overbought can become more overbought. I hopefully tried and topped oil prices this past week by grabbing a couple of swings in the oil sector. So let's see what plays out on that. Those swings were really chart-based, and with so much news out there that could flip the switch opposite and bring the sellers into the market, I figured, small swings, a shotgun approach is essentially my thinking at the moment. There's no knowing what's going to wake up. Shoot a bunch of stuff at the wall, small, and see what sticks and go from there. Again, we're waiting for momentum to come back into this market. There has been no momentum for so long. No real peer action, no real sector action. It's just whatever stock, the crappier the better, and if it has an offering about to drop, even better. Those are the ones that have been running recently. SPY. Now, the charts that I'm going to be looking at this week mirror the SPY, and you're going to see this pattern play out in a lot of stocks when you pull up your charts. You see this big sell-off that we have, then we had that big rally back a week ago, and then the downtick. So this is the formation. Now, this formation, we cannot break down below this, or this negates this formation totally. What we want to see is that was the bottom on Friday, and we start to see things pushing higher, i.e. we see the SPY try and retest the week ago highs. Another chart that has that is Netflix. Netflix got hammered on its earnings report, ran all the way back up, essentially a $100 move, came back 50, looks like it's putting in support now, and this upcoming week, maybe a $20 to $30 pop on the upside if this pattern plays out throughout the market and we don't see interest rates spike dramatically this next week or some other geopolitical news, screw things up. Speaking of earnings, this was, a bad earnings report. Facebook's was a horrible earnings report. Amazon missed, guided lower, and the stock rallied. What that tells you is this is still a market that nothing is for sure. Nothing is ever for sure in this market, so just keep that in mind. Amazon should have been down, just like Facebook was, in my opinion. Got a little bit of window dressing thanks to Rivian, which is down, 50% from its IPO. You never know what the algos are going to do, so you have to position accordingly. And this is not a market where you take big gambles on anything. High cash remains the stance in my eyes in this market. Disney actually has earnings this week. Now, the earnings, they've already guided. They got hammered when they guided what was going to be coming on this stock and got hammered when Netflix had their big miss. So what is going to happen with Disney this week? The year-over-year comps are very, very easy. We should see a large increase in revenue and profit, 25-30% possibly or more. But is the market going to breathe a sigh of relief, or are they going to hammer the crap out of this stock? That's going to be one of those interesting things this week. But going into that report, you can see Disney has that same chart set up. So we could see move up to 145, 147 into that earnings report. Prso. Now, this kind of has that chart set up, but I am in this stock for another reason. A, it owes us money. It owes me money, damn it. This was one of those broken IPOs that just got, or broken merger plays that got caught up in a really crappy market. But this is a company that should not be down here, in my opinion. The sector it's in, the float it has, and this chart that it has. And the big kicker, any day we could get news that they get an order from China Unicom. Now imagine what we, or just look at what we see on these junky stocks that put out garbage PRs, the kinds of moves they have been doing recently. This stock puts out a China Unicom PR. I think we could be looking at the threes rather easily, especially with RSI looking like it was before we saw a 50% move last time. We're also about to get a positive MACD. Chart looks good, low float, and it has news coming. Three great ingredients I see near term for possible upside. Oilers, RCON. Big pop a week ago, came right back down. Low float Oiler. Oil continues to go gangbusters, and the 50-day up there in the 130s looks like a good target. HUSA. Now, HUSA is an Oiler, and it's a low float. But this sell-off here was from our old pal Alt, the DPW guy who invests in numerous companies with the stock that he sold and destroys them, bring the kiss of death. This was him, actually one of his subsidiaries, selling out of HUSA over the last few days. They dumped all their shares. They're either all out now or, per the filings, have 250K left. 20-day is 140. Back to the range is that 140 to 160 area. With oil continuing to move, this setup and that clown out, this chart looks good, in my opinion, for a nice little move on the near term on oil. INDP, low floater, same chart. If it can break over 5 or get some kind of positive news, this, like PRSO, is the kind of low flow chart that they could chase bigly. And if this one goes and I don't have a position in it, it's going to be one of those stocks I'm going to be mad, which is why I'm swinging a position in it right now. OLB, crypto actually did very well on Friday, and that in turn is a good sign for the speculative nature of the market right now. This stock had a big pop up to 258 and was really kind of dead given the moves that we saw in crypto last week. These guys also have an upcoming press release regarding their crypto mining business kicking into full gear. They expect $1 million a month in revenue. 225, 250 bounce target on this one. SEAC, this is the company merging with Triller. And, you know, we keep seeing fun being the stock that everyone chases on the Trump SPAC going up. But this stock is a social media play, $2 value in the merger. Sitting down here at 120, was on Fox Business. Funds claim to fame is something that happened a year ago in an election, one little small contract. I'd say there's like a 2% chance they actually have anything to do with the new Truth social media site. So SEAC, nice chart. It also has that kind of little setup here for the pop. Merger value is $2. So if the volume really kicks into high gear here, this is a 140, 160, $2 possible swing, sitting really low on the chart right now. We've seen similar kind of action from this price level. TRCH, you'll remember that merger play last year, ended up becoming Meta or something like that. Same setup, same chart, good risk reward in my eyes. Last stock I wanted to talk about is GBR, low float oiler. Nice chart setup. It just needs to break and close over 3, and we could be looking at a chart move to the $4 area here based on how this thing is setting up and what oil is doing. This is a stock that if the algos latch on, it goes big. So that's why I'm positioned in a small position here. So that's it for the video, guys. Enjoy the rest of your weekend. I am optimistic heading into this week, just seeing what I see out there. Doesn't mean that news can't blow the bottom out of this market right now, but going into this week and the action I saw on Friday, I'm optimistic for the upcoming action this week. So I'll see you all in the chat tomorrow. Bye.